Hi, everybody. This is the Bitcoin Critical Pulse. I am here with Chris. Today is August 12th, 2025. So, for the people that are not familiar with the show, uh, we are discussing topics that are related to this field of science called complexity theory. And it's a way of understanding different complex phenomena. The term has actually specific meaning. It's not just something that is complicated. Uh, but the idea in general is that there are many systems where things seem to be acting in a very regular fashion. And then all of a sudden, the system reaches some kind of a critical level. We see a lot of examples in daily life about this. Like, for example, we are even an expression, right? We say, "Oh, that was the straw that broke the camel's back," right? Because you can see a situation like that where you have a system, in this case, the camel, where you are adding something like the straw, and you're adding, nothing seems to change, at least not fast, right? You see maybe the cargo, the camel becoming bigger and bigger, and then you just take one more straw for something catastrophic to happen, right? Maybe the camel breaks his back and it flattens on the ground, right? Um, Sand piles is another example of that, but there are many systems like this, and scientists didn't have the tools to understand them for a long time. And let's say, think of basically last anything between 30 to 50 years. Some of the results actually are even earlier than that. And so you can see how this way of understanding the system, developing different tools and language, is not the same type of approach that you will have in describing things that are more regular, like the motion of a particle, for example. Um, so this type of approach, you can see how it can be very relevant to understand markets, because it seems market behaving that way, right? Things seem not to change much. In particular, think about Bitcoin, right? We have this time where people say, "Oh, it's basically boring, it's doing the same thing, we're getting stuck to a particular price level," and then all of a sudden, like what happened in the last few days. But this is so typical, right? We have seen it many times. There is a jump in the price, there is a lot of activity happening in a very short amount of time, and this is exactly the realm of complexity theory. Like we have the tools and the language. So instead of using the typical trading tools or analysis tool that people are familiar with, that from technical analysis, we develop these more sophisticated tools. And I'm interested because this is kind of an area of physics that is very fascinating to me. And I was looking for somebody that maybe use TradingView to develop some of these tools. There is a particular one that is called the log periodic power law. And I was surprised that actually somebody already did some work in this field. And this is how I found Chris. And I explained many times in previous episodes how he had a very nice explanation about what log periodic power laws are all about, and seemed like somebody that had a very deep understanding of a topic. And I thought, in fact, he was another physicist. And when I met Chris in person, I started to contact him through TradingView. I found out that his background is more like traditional finance. So, but he integrated. He was very curious about this idea. He tried to understand them and integrate it with his understanding of the market. And so now we are developing this collaboration. We have a website that you can visit. It's called Complexity Trading.ai. You can see the link in the at the bottom of the screen. And so we do this show where we basically analyze the price of Bitcoin and also different derivatives around Bitcoin, like IBIT or strategy and so on, using these tools that Chris and I develop. Mostly is Chris' work, but I'm helping with that. And we put them also in the context of a long-term power law that I develop. And the two tools integrate each other because the power law, the power law theory that I develop give us like a long-term trajectory for Bitcoin, while these tools that are very much complementary look at the more recent Bitcoin action and how, and these tools really work well together. And so this is what the show is about. Chris, do you want to add or discuss any other topic related to this?
No, I think you've covered it. I mean, Giovanni's work I would think of it as more of the kind of macro long-term perspective for Bitcoin. And what we try and do with the tools that we are developing and are starting to roll out is to understand more of the micro conditions that might apply and how you might consider trading that or using that information to create income generating strategies. So
very good. Yeah, this is also important point because these tools are very actionable, and we gave in past episodes examples. In particular, I'm looking at things that can give you kind of a consistent yield because many of us are long-term holders, but if you can use your Bitcoin as a collateral, maybe to do Bitcoin or Bitcoin derivative like IBIT, for example, to do options trading, for example, that could give you both exposure, long-term exposure to Bitcoin, but also additional yield that you can use to buy more Bitcoin. And this process then it becomes exponential. So it's something that I think it's a kind of core message that I'm giving out more and more often because I think of a time where you could just buy Bitcoin and sit on Bitcoin and wait, 10 years to see your Bitcoin going up, 1,000 times are over. And so you need to be a little bit more involved investor if you want to see, maybe 100 pair gains, in a relatively short amount of time, let's say 10 years. That is achievable with some of these tools. Anyway, so we have talking about giving projections about possible gains, etc. These are all intellectual discussions, right? We are trying to give educational material here, not to have financial advice. So in fact, Chris will tell us about this particular subject.
Yeah, so thanks, Giovanni. I guess everyone's really bored with the disclaimer that's sitting on the screen right now. So I'm going to assume that everyone's read it, and I'll just say that this is not financial advice. Everything we do here is for educational purposes. We're not encouraging people to trade. Trading involves risk. You should do your own research and consider this to be an educational session, not financial advice. So we can move on from the disclaimer.
Okay, so let's jump up. Let's look at the long-term trajectory first, and then we can go more in the details of the recent price action. So this is, I'm assuming that many of our viewers are very familiar with the power law. Basically, it's the idea that if you plot the log of a price and the log of a time, you'll see a straight line in a graph like that. Unfortunately, it's one of the things that it's not easy to do with TradingView. It's not easy to take the log of a time. There are indirect way of doing that, but it's not a natural thing. People told me they contacted TradingView and they are trying to convince them to have a little option. You see here on TradingView, you can switch between. See, this is how actually everything looks like if you don't take the log of a price, but you have that option, right? You're taking the log of a price. We don't have the option to take the log of a time. Otherwise, all this action of Bitcoin will look like a straight line that is very remarkable. Now, we can still take the math of that equation, of that straight line in that log space. It turns out to be basically what is called a power law. Basically, price is proportional to time to a power, in this case, the power of 6. And we can still plot it in a graph like this. A graph like this is called log linear. And it will not look like a straight line. It will look like this white line that is basically curved like that. Remember, that is just an artifact of a graph, because if I go to a linear chart, the power law looks like a parabola, like a super parabola. It looks, because, parabola is square and this is 6. So it looks like it's going up, right? But if you take the log, then it looks like it's bending like this. It's bending because a straight line in a graph like this will be an exponential. So anything that is kind of slower relatively to an exponential looks like it's bending. And this is the case for our curve. But it's amazing that we can actually simplify the long-term trajectory of Bitcoin with a single equation. And it's not just something that we draw by hand. It's all supported by math, by different type of analysis that not just me but other people did. And Bitcoin has, this model is really powerful, even if simple, right? It turns out about 95% of Bitcoin behavior can be explained by this simple line. Now, in addition to this line, we can add another line, which is what we call the support line, that is about 60% deviation from the trend line, the mean trend line. And you can see the significance of that line is that it kind of touches all the major bottoms of Bitcoin. In fact, even during COVID, we barely touch that line and then we bounce back. It's almost like a stress test, if you want, of this theory that this gray line is significant. In addition, we can also add this channel, that is what we call the decay channel. Basically, you can model the behavior of these bubbles. So beside the long-term trajectory, we see also deviations that form these bubbles. These bubbles are periodic. They happen every 4 years, at least until now. But also, if you express the deviation as a difference or deviation from the power law, then you see a clear pattern. It is an exponential decay. And that exponential decay is also an equation. So everything you see here, these are just equations. And so you can add the power law and the exponential decay. You see this line, orange line, is not parallel. Like the support is parallel to this line, but this is not. You see how it's actually going down. It never crosses the white line. It's supposed to approximate more and more, to come closer and closer to the white line, but never cross it. So this decay channel represents the decay of these bubbles. If you project this decay channel to the future, and in particular to this particular bubble, usually the peaks happen at the end of the year, around November. So we can project it all the way to November, December, and we can get a projection about 200,000 for this peak. So, and that is a deviation of about 80% from the power law. The power law itself will give us about 130 by the end of the year. But if, the modeling behind this is that if everything repeats like in the past, and this decay that we observe is true, then we should reach 200K. Now, I have mentioned this many, many times, that these cycles started exactly where we're supposed to start in November of last year. Everything seemed to follow here. Everything seems to follow the previous patterns where we are supposed to cross the power law, stay above the power law, but that didn't happen. We had a correction. It brought us back down to below the power law. And this is an anomaly because it never happened before. And since then, we started to recover, but then also follow basically very, very closely the power law, with occasionally at times where we started to see kind of run up. And we were all excited because I thought maybe this is when finally we get a bull run that we're expecting. And it happened once. Then again, we follow almost in a parallel fashion of the power law. We went back to the power law. And now in the recent days, we kind of repeated this run up, and we don't know, are we going up or we continue the bull run? Do we reach the 200K? All this is a big question mark, because simply we are oscillating around the power law, like it seems that we are doing since at least May of this year. So this is the analysis. The power law, basically, to summarize, the power law is stronger than ever, because basically every time we leave a power law, it's a challenge to the power law. It's a challenge that eventually is lost because we go back and we kind of restore the power law behavior. But this time, we are actually following the power law closer than ever. So the power law in general, it's stronger, but this modeling of the bubble seems to be challenged this time, right? It seems that it's not working that well. So this is one thing that needs to be understood, right? Do we have no more bubbles in the future? Do we simply follow the power law? This is an open question right now. Anyway, so this is my analysis for the long-term trajectory. Let me know if you have any questions. We have a chat, so please ask questions if you like. And now I leave the floor to Chris.
Thanks, Giovanni. Okay, so what we have going on here is the daily chart. And when we spoke last, we were in this area here as the market was turning down. And my commentary at the time was that we had seen the pulse line separate from the static line. And this is a fairly classic start of a move that you get when there's a separation like this. And that's indeed what happened down through here. And the commentary was that we would get these price extension targets until there was some sort of change in sentiment or change in energy in the market. And we needed to see a confirmation from the static line. That is, this slower moving parallel line needed to confirm the movement of the pulse. So we think of the pulse as the kind of scout that goes out into the field to see where the action is, and the static as the general that says, okay, I'm going to follow you in and we're going to go to battle here or not. And it appears that since that time, we've found some support down at these levels, and the market has started to move back up. The pulse has changed direction and has headed back up towards the static line, and in fact broke it on Monday quite significantly, and broke through and hit an upside target that was generated the day before, and created this much higher target of 124,000, which has not been met yet. But you can see that the price action today has started to move back up, and the pulse line has turned green and is starting to move back up. This little box that you see down in the corner here is just showing the state of the two pulse line, the static, which is white, and the pulse, which is green. And that is replicated over here in this other box that you have in this lower time frame at the bottom there that shows it exactly the same. I'll just very quickly show you the monthly chart, which has this target that's been sitting here for a while now at 124,211, that's still intact. And when the market was testing these lower levels recently, we were concerned or thinking whether or not, asking ourselves whether or not this target would stay in line. And the answer was that you really needed to see a very significant close at month end, at much, much lower levels to invalidate this target on the monthly level. But what's interesting now is that at the daily level, this new target that's been generated is very close to the monthly target. So that gives us some comfort. One of the things that we've been talking about in the Discord channel that we have for folks who are using the tool is trying to understand how different time frames might influence the market generally. So the question is, what do we need to see at these lower time frames, 1 minute all the way up to 8 hours in a day before we see a change in the condition, the state condition of the daily chart. So the current state is a white static and a green pulse, which is a generally, it's a mixed signal, but it's a slightly bullish signal. If the pulse was red, that would be a slightly bearish signal. If the two align and they're both green, or green and blue, blue is the less conviction bullish signal that plots on the lines. Orange is the less bearish of the red and downward sort of conditions that plot. But if these were both the same color, both green, that would be a strongly bullish signal. So what can we learn from the lower time frames as their activity washes through the market? And it's almost like an ebb and flow situation. So if we go to a much lower time scale, if we go to the 1 minute time scale, for example, and I'll just turn off these price projections so we can see this more clearly. And we go into replay mode. You'll see what I mean here. So I'm going to run this reasonably quickly so that you can see. But what I'll ask you to watch is this table down the bottom here, and you can see it's plotting the 1 minute, 3 minute, 5 minute, 15, 30 minute, 1 hour, 4 hour, and day. So we won't expect to see any real movement in the daily conditions of white and blue, the static at white and the pulse at blue. But we will expect to see these lower time frames move. And what I'll ask you to focus on is the colorings of these different states for the different time frames as this evolves. So we'll just play it and see what happens. Just slow it down a little bit so you can focus on it a bit more. So as price moves, you can see these lower time frames moving in and out of bullish and bearish conditions. But as they extend and become more uniquely bullish, or in this case, we've got a white state, so this is probably a top that's performing here. But you can see that it resolves one way or the other. In this case, it resolved to the upside. It turned blue and continued up. But the point is these lower time frame conditions eventually gain enough force and coherence and confluence to wash into progressively higher time frames. And depending on what it is that you're trading, you'll see that this will influence the outcome for that time frame.
I really like these animations; are very interesting.
Yeah, and it really helps. So if you're trading, a 15-minute time frame or a 30-minute time frame, you want to be watching these lower time frames to see what they're telling you. And we're getting a lot of the same sorts of patterns that you see in all of these time frames. This joint white state that you see here that happened at around 2 o'clock resolved with the pulse moving first and then a confirmation from the static. But the pulse is definitely something you can trade. And recall I said that the white state and the green is a bullish combination, and that's exactly what was tradable through this period right here. So these signals just continue to evolve through the course of the day, and we've just upgraded the system so that this table can be plotted with whatever timeframes you care to monitor for your particular type of trading. And you can see that as this is evolving, the tone of the market is influencing the strength in the daily output for the static as well. So it's double green right now down here. And that's it. So we've reached the end of the play there. So let's go back to daily and just have a look at a couple of other things that I think are interesting to talk about. Okay, so one of the things that's hard to understand and hard to figure out is when the market has action like this that we've had for the last several days, is where this top is. And traditionally, people would be looking at chart patterns and things like Bollinger Bands and try and figure out whether or not there might be some information that can be gleaned from that. And what you see here is Bollinger Bands with 1, 2, and 3 standard deviations plotted. And the problem with Bollinger Bands, I find, is firstly, they're just a mirror image of each other, so they don't really tell you a lot. And depending on how you frame the period of measurement for the standard deviation calculation will determine the sensitivity of these bands to price. So if price is bouncing along and hits the 1 standard deviation from the average or whatever the metric is that you choose to calculate the Bollinger Bands from, you get this type of mixed signal. So do you sell for the rebound, or do you buy for the breakout? Do you do it at 1 standard deviation or 2 standard deviations, or do you wait for 3 standard deviation events? How do you trade it? And then when you have a volatile period, that feeds into the data that's calculating the band and remains in that calculus until such time as it washes out. It's a rolling calculation. And you can see at this point, there's a compression, a dramatic compression in the Bollinger Band, suggesting that you've got this tighter trading period, but all of a sudden you get an explosion to the downside and the bands blow back out. I've never found that information to be that useful. So one of the things that I built to address that is this other tool that we have, which will be released, called the LPPL Coreline Pro. And it's quite different. And I'll just turn the bands off, the Bollinger Bands off, so we can see and focus on it. And we'll talk about this white state in relation to this this core program that we've built. So it takes information from the parallel lines and uses those to construct a series of essentially attractor conditions, all of which are dynamic. So they respond to the price activity and the information coming from the parallel lines. And if we think of these bands as being sort of like cell walls that absorb energy, and one of several things can happen. Price can run up to the cell wall, as it did here in late July, and when price has enough energy, it'll push that wall to a higher and higher level. And it will continue doing it until the wall absorbs all of the energy and price can't push it any further and price starts to retreat. And you'll see that we don't have mirror image bands here. These two boundaries, these two cell walls, react very differently to each other. They follow where the energy of the market and the structure of the market is dictating they move to. And similarly, the attractor that we see here is dynamic. So if we roll back in time, and just watch how this unfolds, you'll see that we start with, I'm going to mark this so that you can watch it and just see how. So this is our initial attractor, and you can see it's about equidistant between the two cell walls, the two outer boundaries. And we'll just play this and watch it unfold. So you can see that it's already moved down as the price started to retreat a little bit from the wall. But here we have price accelerating and pushing up against the wall. This lower cell wall has just faded into the background and moved, hasn't started to move yet. But you can see the attractor here is moving up towards where the action and the energy is. The cell wall absorbed a lot of the energy and has held. The white state has kicked in from the power law. Now we've got a retreat happening with the pulse coming down. And price traded down below this attractor. This lower wall has moved back up, and we're left with this situation where price has had a run to the upside that we saw here. We saw a lot of energy from that being absorbed here. We saw the attractor move from this level to this level, and we've seen the lower boundary wall, the lower cell wall, move up through what was the original attractor level in the example. So this is a much more dynamic framing than a Bollinger Band, much more, gives you a ton more information about what's going on. And when you couple it with the power law lines, you have a pretty interesting suite of tools to give you clues about what's happening in the market and where the pressure points are and what's likely to happen. And in the past, Giovanni and I've talked a little bit about covered call strategies. And
yes,
one of the things that we talked about was when the market hits this white state, is that a place where you could be selling covered calls?
right.
Well, potentially it could be. And we looked at examples in IBIT and strategy, but you could do it also in Bitcoin, obviously. But when you apply this core line tool to the power law lines, you have this other layer that tells you where there's going to be resistance when price starts to move up.
Yeah.
So you can use these two levels in combination in structuring those types of trades.
What is the level right now for that white line, the top one?
So this is 123, 408.
Okay.
Oh, I'm wrong. It's 123, 231.
Uh-huh.
Now that's just below the 124,000 target that we have in the from the temporal phase models.
Right.
So it's going to be very interesting to see how this unfolds. So I'll just turn those projections back on.
And if you don't mind, maybe let's look at IBIT after this.
Sure.
See how it looks like.
So we've had this first attempt at the run up, and the market ran out of energy. It just ran out at this level up here. We had the power laws come into the white state and price consolidate and then retreat, and now it's starting to push back up again. So the question is, will it continue this move up? And the answer is the attractor here acts as a kind of support level. Price tends to bounce around this or off it, but if it comes through it, then you'd see more downside action. But with the pulse starting to move back up to the static line, if that continues up through the static line, that could be a signal that this is going to start to move higher and try and reach these targets that are projected here. So with that in mind, you wanted to go to IBIT, I think?
Yeah.
Hang on, was that it?
Yeah.
Yeah. Okay, so a not dissimilar story. The same sort of move up that we saw in Bitcoin here, but not as much action, not as dramatic. And the white state, same thing. Pulse, the same move, same sort of configuration as we have. Although these are both now in white state currently. And you can see that price bounced off the attractor level here. So the white state is at 68.21, and this core line level is at 69.46.
Mm-hmm. We are mixing the weekend action, right?
Yeah.
And so what is the top level of that white line?
69.46.
46. Okay. So yeah. So if usually during this up movement, it's a little bit more dangerous to do these cover calls. Now one could just buy calls. So what do you think that this move up will continue, or do we have a correction? If you had to lean one direction or the other.
I don't predict markets. All I do is look at what these tools tell me.
Yeah.
And remember, we think of the markets as only having two states.
Right.
Only they're either confused and seeking resolution, or they have conviction and are moving in a direction, and that direction's either up or down.
Right. So do you think of it the market now is showing conviction in the sense that?
Well, it started to. So we have a separation of the two critical pulse lines. So the static line has not moved yet. It's still in a white state. The pulse initially thought it would move to the downside, but now it's having second thoughts and it's starting to come back. It's as you can see, it's approaching the static line here.
Mm-hmm.
So it's unresolved because it's also in a white state. You'll see down the bottom here that the condition for the day is showing essentially a double white plot, and that just tells us that it's unresolved. So is there? I'm not. I can't tell you which way it's going to go. I just don't know. All I can tell you is that if the pulse was to continue to move up and entered and moved above the static line and turned green and ended up closing, on a daily basis above this static line, that would be a bullish signal. Right. And it would likely continue up. It would certainly continue up until it met this boundary level, this sell wall in the core line, as long as these lower timeframes supported it. We have a target of 69.83. So as long as that target doesn't get invalidated, that's likely to be tested at some point in time. We don't know when. We just know that that's a valid target until it isn't. This target, 67.67, was made here on Thursday. It was met yesterday. So there's no P1 target. There's only a P2 target, which is up here. There's no P3 yet. So in the course, oh yes, there is. I beg your pardon. Look at that. It's up there at $71. So this price activity that we saw here, this pullback and this rally, was sufficient to generate new upside targets. The first of which has been met. The second and third have yet to be met. And interestingly, they're above this core line wall. So what that would suggest is that price will move up. It'll hit resistance here, and it will then attempt to push this higher towards these levels.
Yeah. So let's say 71, right? So let's say I'm trying to make it as practical possible, looking at the chain right now. So the 71 call, let's say we look at 10 days horizon. It's a very short framework. August 22nd is when the next expiration date is. So I will feel comfortable, for example, to sell 71 call because it's possible we go there, but within a week, it's unlikely, right? Plus you have to add cost, etc., right, to do break even. So probably that bring us even higher than that. And that call right now, the ask is 0.48, something like that. So 100 a contract with 100 shares will be $48, right? Within a week, with only 100 shares, right? So again, these are some of the things that people can start to consider, and maybe as a teaching tool, you want to start to play. I use Robinhood, for example, and it's pretty easy to learn how to do. I'm going to actually make some videos so people can. In fact, I'm going to take some snippet from our conversation and show how you can use these and then make some action. So right now, for example, I will feel comfortable. In fact, probably I'm going to do it tomorrow. Let's see what happens tomorrow. Right now, the markets are closed anyway. And 71 seems quite unreachable at this point, right? Within a week. So this is nice to have this target because it's so up there, right? But you require very, very strong movement. It's not impossible, but it's relatively safe, I will
Yeah,
say, within a week.
it's $3 higher than where we are now.
Right. So that is something that even during these times where we don't have a correction down but a correction up, you can be maybe a little bit more conservative and still play with these cover calls. And
What
these
is
tools
the
are very good because it puts things in a context.
Giovanni?
Can be,
What's the next couple of strikes higher than the 71? What are they trading at?
for example, 72 is at 0.32 cents. If you go all the way to 73, 0.21, and if you want to look at volume, so there is a lot of interest, for example, for the 70 has a lot of volume. The next one, 72,
Right.
there's a lot of requests for that.
Okay. So,
If you go higher than that, when we start to see, the price starts to drop,
right.
and there is not much interest in it. There is not much volume.
So if you're long the underlying, the IBIT currently,
Yeah.
Selling these calls above these sort of two levels, the white state level and the call line boundary level, is probably not a bad trade if it's a short-term trade.
Yes.
And you're in the fast part of the decay curve, so these things are going to erode fairly quickly over the next 10 days.
Correctly. Yeah, correct. So this is just an example. Now, in theory, you could also buy the call. It's a little bit more dangerous, in particular if there is a correction. But if there is any upward movement, you don't have to wait for the expiration of a call. You could look at calls that expire maybe at the end of the year, and then if there is a movement up, it's always nice to have actually a balance of that. You could sell them later, whenever there is a movement, because any type of movement that brings up the price will make these long-term expiration calls go up by a lot. You could make 15-20% relatively in a short amount of time. But we can look at them. Right now I want to focus mostly on cover calls because I think for the people that don't have a lot of experience, it's the easiest thing to do. So you will have to buy the underlying asset. Ideally, you will also see, for example, maybe you want to, if you don't have yet the underlying asset, maybe you want to wait for a correction and get a better deal for these calls, for these shares. Right now, for example, we could go back to 65. It's a good price to buy them. And then, once you have the underlying, buy at least 100 shares, then you can start to learn how to do these options. And I will have some dedicated video on my X to explain how to do that. I find these tools very, very useful.
So let's look at so this is master strategy.
Yeah, it's much more damped action, right? It lost a lot of the, so there was a big correction, but it didn't go up much, right? It used to be the other way around.
Well, master's really interesting because a lot of people like playing that arbitrage against Bitcoin, and because it's got such a large market cap now, and it's pretty liquid. People can get set for trades at size and just trade this MNAV position. So, there would have been a significant retreat in the value of the MNAV from up here at 456 down to 358, $100. That's 25%. That's a big move. And you'd expect those trades to be unwound. They don't have to hold them until they go to, until MNAV approaches 1, people
Right.
can move in and out of them. And there's a fairly significant portion of the short interest that's tied up in this trade. So don't expect a short squeeze here. If there's, I don't know what the numbers are, I looked at them a while back, but just illustratively, if there was 25 million shares short, probably 60-70% of that is arbitrage related, which means that if anyone was trying to push the price of strategy up, it would just run into a wall of more arbitrages as the MNAV expanded. So this sort of volatility is great for someone who's got that trade on. They can move in and out of it and capture some very nice returns.
Well, I'm looking at this two line, right? The colored one. What does it mean when they diverge like that? Because they seem much closer to each other.
Yeah. So it's very interesting. So the two parallel lines have essentially got about, there's sort of three things that you want to watch: the parallel lines themselves, and price, and how they all interact with each other. And when they're very close together, that's really good. That's good trading opportunities. And there are many instances of that. I don't know if we can see any here. This is a very scattered and nasty chart. You can see it more in Bitcoin. I'll go back to that and show you some examples. So you want to look at three things: the relationship of the static and the pulse and price. And when they're divergent like this, you basically want to stay away. There's no good trade to be done here. The market doesn't have resolution. It's fighting against itself. We've got the static, which is the slower moving component, moving up. You've got the pulse saying, no, I'm not having that. It's moving down. And price is essentially, moving up and down. It's chopping a little bit. And if you go into lower time frames, you probably see the same thing. Let's just have a look. Yeah, big divergence. Although at the 4 hour, you can see that this pulse has started to turn back up. So probably what's going to happen, and if you look here at these time frames, you'll see the 4 hours both green. The 1 hour that's a bullish configuration. These next two, this lower one at 30 minutes, that's conflicted. This one's bearish, 15 minutes. The lower time frames, 5 minutes and 3 minutes, that's a bullish signal. The bearish in the 1 minute. So this is still trying to figure out what it's wanting to do. It hasn't reached resolution yet. The daily output is negative. The 4 hourly is not. I wonder what the 8 hourly is. Let's see. Okay, so the 8's in conflict. So we've got this, the static moving up and the pulse moving down. So same thing. And price is right at this attractor level. So it's hanging right around where the signal is saying it's a level where it needs to figure out what it wants to do. So it's likely going to bounce around here a little bit until there's more resolution in these lower time frames that will give it a direction for it to move out of this. And right now, there's inconsistency across these lower time frames. There's nothing that's suggesting there's a coordinated a confluence of these signals at lower time frames. So I'd expect more chop.
Okay, that's good. Okay, great. I don't see many questions. Maybe one of the things we can do is you want to show us the website where people can go and get more familiar with our work, and so we are ready to send a newsletter. It should get out to the subscribers next week. And you're done with the analysis, right? We can show the
Yeah. I've got it. I'll just
Okay. So this is the website. It's complexitytrading.ai. Please visit the website, sign up. The newsletter is completely free. In the newsletter, there will be introduction, to these main ideas. Every week, every month, we are going to cover a particular topic, give you like some background, maybe some reading suggestions, but also we are going to give some examples of this analysis that we describe in the video. So people like to read and see charts, etc. So you will find that in the newsletters too. But if you're interested in using the tools, you can already access them. This eventually will be 12 different indicators. Right now, how many are active right now, Chris? Just one?
Just one, yeah. The others that I've profiled here today should be out shortly. I'm just
Okay.
just got a little bit more work to do on them.
But if somebody want to sign up and you start to use some of these indicators, what do they do?
So you come to the website. The first tool that we have is this power law indicator. So you just follow the links here. You can subscribe. If you click on learn more, it'll tell you a bit more about.
And this is independent from the newsletter, right? So
yes,
newsletter is completely free. You get all the information. But if you want to have a trading view indicator, then you can click here and you can subscribe, right?
Yeah, it's very slow. I don't know why. There we go.
Yeah, if you click learn more, there is more information.
So this tells, So, the real, this is a very different way of thinking about markets. And as I said at the outset, we really only think of markets in two conditions: confused or moving with conviction. And that's what this power law tool does. When you have a white state, when both the pulse and the static lines are white, the market's seeking resolution, and you see that play out again and again across multiple timeframes. The patterns that indicate that a fractal. There's self-similarity across and scale invariance all through this. So it just happens again and again, and you'll get familiar with the patterns very quickly. But you have to think of this not as if you're using some other form of technical analysis. That is not what this is at all. This is really looking at the structure that really drives markets, and the structure is the thing that's really important, and it comes from all of the different components that go into a transaction actually being implemented. It's not just a bid or an offer and that's it. It's everything from the participants, the different classes of participants in markets, from outright speculators, long-term investors, people trading ETFs, people trading the physical. It's the settlement mechanisms that they use to implement the trades and affect the trades. It's the interaction of the different exchanges that the transactions are affected on, not just locally, but internationally for different instruments. It's all of that type of stuff. It's the structure. And price is the footprint that's left by that activity. And sometimes it's ordered, most of the time it is, but a lot of the time it's not. And we know from the work of people like Nassim Taleb and his work on fragility and infragility, that these various components interact in ways that influence where price ends up going. So these two critical pulse lines look at a number of different factors that take all of this stuff into consideration. And the conclusion is the market knows what it's doing or it doesn't. So we're less concerned about price and where it's going. We're not trying to extrapolate squiggly lines from or channels from patterns that we see objectively on a screen. It's got nothing to do with any of that. All we're saying is price knows what it's doing or it doesn't know what it's doing. And the power lines give us indications as to when those two conditions apply. So that's what this tool does. It identifies state change and detects changes in those conditions and lets you then figure out what you want to do from there. The other tools help with that process by giving us attractor levels, target levels that the market is likely to be attracted to, and a whole array of other things that are shown in the other tools that we're rolling out, which are shown here.
Okay.
They all do something different. It's not like stacking the same information on top of each other. They use different scientific methods independently. And when there's confluence between them, then that's a real signal. That's meaningful. It's not just a variation on the same price theme.
If somebody subscribes for the first tool, they will get all the other ones for the same price, right? So you can start to use. Okay.
No. So there's the log periodic power law is kind of the anchor piece. It's the main component.
Yeah.
And you can subscribe to that for $100 a month or $1,000 a year.
Yeah.
Each of these others, there are 9 of them, and they'll be available in groups of 3. So we're still finalizing the pricing on that, but it'll be much less than the other power law, the log periodic power law component.
I see.
So they'll be available in groups of 3, and each of these things does something different. And depending on how you trade, whether you're a long-term trader, long-term horizon, or a scalper, or a pivot trader, or a swing trader, or anything else, you'll find that there are different components of these that would suit your trading better than others. So what we're going to do is allow people to mix and match these for a little bit until they figure out the combinations that they want. They might want them all, they might want 6, they might want 3, who knows?
Okay.
But if they pick the first 3 and they find that's not quite right, we'll let them swap them out and change them until they get the combinations that they really need.
Perfect. Okay, great. And again, show one more time to get the first one. So you click on it.
You click on this and you click subscribe.
Subscribe.
Put your information in there. Make sure you give us your trading view name so that we can get the tool to you by private invitation.
Okay. And what happens, I already explained this, if you subscribe to this first indicator, you also can contact me. Chris will give you can DM me, or you will have a link to the Discord channel, to my Discord channel, and you will get some of the main power law indicators, and 3 or 4 of the main power law indicators that I develop. So you're going to get that as an additional perk of signing up. So you can both look at the long-term trajectory and the local price action. But go through the process. You will get a Discord link. There is 2 Discord group. There is a Discord group for the log periodic power law, for all these complexity trading discussions, but you also will get a free invitation to my group by doing that.
Yeah, and it's a cool thing when you can overlay the Giovanni's power law.
Do you have an example of it?
Yeah. There you go.
So this is one of the indicators you will get in addition to the log periodic power law. You get also these, we call it bands.
Right. So so we have 3 things displayed here. We've got Giovanni's power law line, which is this white thing here, and the various other components that go with that.
Yeah.
And we've overlaid the critical pulse and the core line at the moment. So you can see here we've got
they work very well together. It's amazing.
Yeah. So you can see here, I'll just blow it up, make it a bit bigger so people can see. So here's the power law line. Here's the, what do you call this one, Giovanni?
This is the full model, what we call the full model, because it also includes the bubbles.
And this is
that is the decay channel.
Right.
Or part of the decay channel. It's a deviation from the decay channel.
Okay. So I'll get rid of this. So here we have, it overlaid, and you can use them all to get a better perspective of what the market's doing and where it's likely to find support and resistance, to use some terms that everyone uses in technical analysis, although this is not that. But you can see that we've got these core line bands and attractors and levels that's likely to absorb energy from the market, levels that the price is likely to bounce away from. And you can see that when you've got all of this information, you're much, much better equipped than just trying to extrapolate traditional head and shoulders or ascending triangles or doji candles and all of that stuff.
Absolutely.
Totally different.
I mean, you can still use it, but more information will be better. There is a certain point, though, where you want to avoid clutter. If you have too much information, that actually is counterproductive. But this is a good balance between long-term trajectory, going deep in this new vision of a market. It is very unique, about states. It's very powerful.
Yeah. So it's just a different way of thinking. It takes a while to get used to, but if you start observing how these states occur and how they change, and you can see they've changed as we've been talking at these lower timeframes. They've all gotten more bullish as we've been talking.
Yeah.
So you can see how these state conditions just wash through the market over different timeframes, and that's a totally different perspective from saying my RSI is telling me that I should be long or I should be short, or my MACD is telling me something entirely different. Those methods are, I respectfully submit, are things of the past. And this is it's a new world. There's a lot of scientific methods that have been applied in the markets that have not been available publicly until recently, and we're trying to make sure that people have access to those tools.
Fantastic. We do have a good question, this one by Boivo. It is one of our followers, and
Giovanni and I have been talking about this, Boivo. We're doing some work on it currently. So it's a hugely appealing concept that. Let me
you explain a little bit.
So the calculation of the log periodic power law is fairly intense and requires certain capabilities that Pine language doesn't have. Pine is the language that's used in TradingView to create all of the things that we've showed you today, and all the other tools that are available out there. But we're really pushing the outer boundary of Pine's limits with the calculations that we're performing to create these tools. It's just not capable of doing the math that you need to calculate Sornet's log periodic power law. And TC in the power law is the critical time when the future event of collapse, the critical moment, is likely to occur. So when Boivo says, TC, that's what we're talking about. It's the projection of a likely collapse. Now, it's not always entirely accurate, but there are plenty of instances where it's shown pretty amazing results. And there are lots of white papers out there and academic studies evidencing the efficacy of the log periodic power law and its ability to calculate critical moments in markets when there's likely to be some sort of a collapse. The tools that we're using function across all timeframes and let us look at micro collapses, micro movements in the market. So it doesn't have to be a crash like in '87 or the .com bust. It doesn't have to be or COVID even. It doesn't have to be anything like that. These are much smaller micro movements that happen from in much smaller timeframes. So 1 minute, 5 minutes, 10 minutes, an hour, and we can capture those. But what we can't do is calculate the critical time in the same way that you would if you were using a more powerful programming language like Python, for example. So what we've observed is that the power law lines, the critical pulse static and the pulse, cross each other periodically. And it's really intuitively appealing to think, okay, maybe that is telling us that this is a de facto equivalent of the critical time. And I did some initial analysis on that. And I looked at different combinations of crossings that occur between price and the two pulse lines. And there are a number of examples, and only a few of them, I think, have the sort of efficacy that we might want. So my initial reaction, Boivo, is that there may be a couple of instances, very specific setups between the interaction of the two lines that could coincide with the traditional TC, but I haven't built the library yet of examples to test that against, and that's something that Giovanni and I are working on.
Yep, absolutely. Also subscribe to our newsletter, because we will update you on all these discoveries and developments. It's free. So, okay, good. I think we had a very nice episode. We covered a lot of ground and ideas. So, as you notice, we shift the time to 2:30. This will be the official time moving forward, and it will be on Tuesdays. So every Tuesdays at 2:30. So let's see each other next time at the same time, same place.